macro currency signals.
I never thought I'd make this video. I've defended silver for years. I bought the dips, ignored the noise, and believed fundamentals would eventually win. But today, I'm done. I've decided to sell all my silver, and this decision didn't come lightly. This isn't fear. This isn't panic. This is disappointment and clarity. Before we go any further, I want your advice. If you think I shouldn't sell yet, let me know in the comments. And make sure you're subscribed with notifications turned on. Staying early matters in moments like this. Drop a comment below and tell me where you're tuning in from and what time it is on your side of the world. This conversation is global, and it's always powerful to see just how wide the reach really is. Share your location and local time, and I'll catch you in the next one. Now let me slow this down, because this part matters. For years, we were told silver would respond naturally to economic reality, that inflation, debt expansion, currency debasement, and geopolitical stress would force higher prices. And on paper, that argument still looks perfect. Governments printed trillions, purchasing power collapsed, trust in institutions eroded. By every historical and monetary standard, silver should not be where it is today. And yet, here we are, watching the price grind lower, stall, or get violently smacked down every time momentum starts to build. That disconnect isn't just frustrating anymore, it's insulting. What finally broke my confidence wasn't one bad week or one bad year. It was the pattern. Silver rallies just enough to pull investors back in, just enough to restore hope, and then it gets crushed again, over and over. No follow-through, no sustained trend, no reward for being right on the macro picture. At some point, you have to stop asking when the breakout comes and start asking why it never does. Markets that are free don't behave like this. Markets that are healthy don't repeatedly reject their own fundamentals. And the worst part is how numb the market has become to events that should be explosive for price. Historic inflation prints, shrugged off. Banking stress, ignored. Exploding sovereign debt, already priced out, somehow. Silver has reached a point where nothing matters anymore. And when a market stops reacting to reality, that's a massive red flag. It tells you price discovery is no longer the goal. Control is. I also had to confront an uncomfortable truth. I kept explaining away bad price action instead of respecting it. I blamed manipulation, suppression, or timing. And while those factors exist, they don't excuse endless underperformance. At some point, price is the message. And silver's message has been loud and consistent. The market is not designed to reward long-term holders. That's why I say the price has lied for too long. Not because silver has no value, but because the trading structure around it has turned that value into a mirage. And I refuse to keep allocating capital to a market where reality and price no longer speak the same language. This is where the illusion really falls apart. Because once you understand how the silver market actually trades, it becomes impossible to unsee it. The price of silver is not discovered where silver is mined, refined, or physically exchanged. It's discovered on screens, through futures contracts that represent massive amounts of metal that will never be delivered. Day after day, silver trades in volumes that dwarf annual global production, and we're expected to believe that this reflects real supply and demand. It doesn't. It reflects leverage. It reflects algorithms. It reflects a system where paper promises have completely replaced physical reality. What finally pushed me over the edge was realizing how little physical silver actually matters to price. You can have shortages at the retail level, rising premiums, delays in delivery, and the price can still fall. That shouldn't be possible in a real market. If something is scarce, its price should rise. But in silver, scarcity gets overridden by contracts that can be created in infinite quantities. When supply is unlimited on paper, price becomes meaningless. This is not a flaw around the edges of the system. It is the system. A handful of financial institutions dominate paper-silver trading, rolling contracts, netting positions, and managing exposure without ever needing to touch metal. They aren't hedging production or facilitating delivery. They're controlling volatility, absorbing demand, and neutralizing price discovery. The result is a market where physical ownership gives you moral satisfaction, but no pricing power. And here's the part that's hardest to accept as an investor. The system is not broken by accident. It works exactly as designed. Paper silver exists to provide liquidity, stability, and control for the broader financial system. A violently repricing silver market would expose leverage, stress derivatives, and signal currency weakness. So instead, price is smoothed, capped, and redirected, not through conspiracy, but through structure. I didn't buy silver to fight a financial architecture designed to suppress its signal. I bought it as a hedge, a form of protection. But when your hedge is actively managed against its own purpose, it stops being protection and starts being dead weight. I finally accepted that owning physical silver does not mean you participate in price discovery. And until that changes, the paper market will continue to dominate reality. For years, industrial demand was supposed to be the safety net. The argument was simple and convincing. Even if investors walked away, industry would step in and support the price. Solar panels, electric vehicles, medical equipment, electronics, silver was framed as indispensable. And that's true. Silver is one of the most useful metals on the planet. But usefulness, I've learned, does not automatically translate into higher prices for investors. Industrial buyers don't behave like investors. They don't chase momentum, they don't speculate on upside, and they don't care about narratives. They hedge, they negotiate long-term contracts, and they secure supply at the lowest possible cost. When prices fall, industry doesn't panic, it celebrates. Lower prices reduce costs and improve margins. So the very demand we were told would support silver actually works against price appreciation in the short and medium term. The solar story is a perfect example. Yes, solar installations are exploding. Yes, silver is a critical input. But manufacturers adapt. They thrift usage, redesign components, and pressure suppliers. Demand growth becomes more efficient, not more expensive. And when price spikes even slightly, industrial demand pulls back just enough to cap the move. It's not bullish pressure, it's a stabilizing force that keeps prices contained. What's more disappointing is how disconnected industrial demand is from the investor market. Massive industrial consumption can coexist with falling prices if financial markets decide to ignore it. Futures traders aren't pricing in how many panels are installed in China or how many EVs are sold in Europe. They're trading dollar strength, interest rates, and risk sentiment. Industrial demand becomes background noise, real but irrelevant to price action. I also had to accept that silver's dual role is a double-edged sword. Being both a monetary metal and an industrial input sounds powerful, but in practice it creates confusion. In risk-off environments, silver trades like an industrial metal and gets sold. In risk-on environments, it underperforms gold as a monetary hedge. It rarely wins in either regime. So when I hear that industrial demand will eventually save silver investors, I don't hear reassurance anymore. I hear delay. Demand keeps the system running, but it doesn't reward patience. And as an investor, I can't base a strategy on hope that usefulness will someday overpower a market structure that has proven again and again that it won't. This is the part most silver investors don't like to talk about, because it forces an honest look at what holding silver has actually cost us. Opportunity cost is invisible, but it's brutal. It doesn't show up as a loss on a statement, yet it quietly drains performance year after year. While silver moved sideways, stalled, or sold off, capital elsewhere was compounding. Other assets adapted to the environment. Liquidity flowed where momentum existed, and by staying anchored to silver, I wasn't just standing still, I was falling behind. What made this harder was how much mental energy silver consumed. Every dip needed justification. Every failed breakout needed explanation. Every rally needed optimism. That constant cycle creates emotional attachment, and emotional attachment clouds judgment. I wasn't holding silver because it was performing. I was holding it because I believed it eventually would. That's a dangerous place to be as an investor. Meanwhile, markets were sending clear signals. Capital was rotating into assets with trend, volume, and participation. Even in volatile environments, some markets respected technicals, rewarded risk, and allowed for strategic exits. Silver didn't. It punished patience, it punished conviction, and it punished anyone who refused to admit that time itself has value. Another uncomfortable truth is that silver locks you into a defensive posture. You're always waiting for crisis, collapse, or revaluation. But markets don't live in permanent crisis mode. They cycle. They inflate, deflate, rotate, and adapt. By tying my capital to a single outcome, monetary reset or supply shock, I limited my ability to respond to what was actually happening, not what I expected to happen. And the longer you hold, the harder it becomes to leave. You tell yourself you've waited too long to exit now, that the move must be close, that selling would mean admitting you were wrong. But markets don't care how long you've waited. They only care about where capital flows next. Eventually, I had to admit that staying in silver wasn't discipline. It was inertia. The cost wasn't just financial, it was missed growth, missed flexibility, and missed time. Once I saw that clearly, the decision stopped being emotional. It became obvious. This might be the most emotionally draining part of holding silver. The constant reassurance that being early is somehow the same as being right. Silver investors wear patience like a badge of honor. We tell ourselves that understanding the fundamentals before the crowd is an advantage. That one day, the market will catch up, recognize the truth, and reward those who waited. And in theory, that sounds reasonable. But in practice, being early for too long stops being foresight and starts becoming a liability. Markets don't pay you for knowing what should happen. They pay you for aligning with what is happening. And silver has taught me that lesson the hard way. Every year, the same narratives return. Debt crisis, currency debasement, shortages, monetary reset, and every year, price fails to respond in a meaningful, sustained way. At some point, you have to question whether the timing is wrong or whether the market simply doesn't function the way you were told it does. Being early also creates a psychological trap. You start anchoring to a future moment that never arrives. You delay reassessment because selling now would mean admitting the wait was in vain. That turns conviction into stubbornness. Instead of managing risk, you manage disappointment. Instead of adjusting strategy, you double down on explanations. What finally hit me was realizing that early investors often subsidize late ones. Liquidity arrives only when price finally moves, and until then, your capital is tied up, dormant, and vulnerable. Silver has demanded faith without offering feedback. No confirmation, no momentum, no signal that patience is being rewarded. There's also a narrative comfort in being early. It lets you feel smarter than the market, more prepared, more aware. But markets are not moral systems. They don't care about awareness or correctness. They care about participation, flow, and timing. And silver has failed, repeatedly, to invite any of that. I didn't quit silver because I stopped believing in its value. I quit because I stopped believing that waiting indefinitely was a strategy. Being early is only useful if there's a path to being right. And after all this time, silver has given me no reason to believe that path still exists. This decision didn't come from anger, and it didn't come from panic. It came from acceptance. And that's a very different place to be. For a long time, I resisted that word. Acceptance felt like surrender, like giving up on something I had defended, researched, and believed in. But eventually, I realized that refusing to reassess wasn't loyalty. It was attachment. And attachment is dangerous in markets. It keeps you anchored to past decisions instead of present realities. I had to separate the metal itself from the market built around it. Silver, as an element, still has value. It's rare, useful, and historically important. None of that changed. What changed was my understanding of how value is treated inside the modern financial system. A market can acknowledge value without ever rewarding it. And that's the hard truth silver investors have been forced to live with. Acceptance also meant letting go of the idea that patience alone guarantees success. There's a comforting belief that if you wait long enough, truth eventually wins. But markets don't operate on moral timelines. They operate on incentives. And the incentive structure around silver does not favor long-term individual holders. It favors institutions, intermediaries, and mechanisms that dampen volatility and mute signals. Once I accepted that, something shifted. The frustration faded. The constant need to defend my position disappeared. I stopped checking prices with hope or dread. That's when I knew the trade was already over. Emotionally, mentally, and strategically. Selling wasn't a reaction anymore. It was a conclusion. This isn't me declaring silver dead. It's me recognizing that my role in this market is done. Maybe the system changes someday. Maybe price discovery returns. Maybe silver has its moment in a crisis that forces honesty. But I'm no longer willing to build a strategy around maybe. Acceptance doesn't mean regret. It means clarity. And clarity is worth more than conviction when conviction is no longer being tested, only drained. Stepping away from silver isn't failure. It's choosing to preserve capital, energy, and focus for markets that still respond to reality. Selling my silver isn't weakness. It's discipline. I'd rather step aside with clarity than stay trapped in a narrative that no longer matches reality. If you're still holding, I respect you. If you're questioning it, you're not alone. This is my decision. And for now, I quit.